Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to talk about the grain market again. We just talked about it a few days ago, but the movement in the markets is certainly warrants a follow-up. I'm going to try and leave this one open since really the cat's out of the bag. I'm not going to delve into too much in terms of the targets, but we're going to talk about the evolution of the trade, the three time frames, how they work, and where we go from here in terms of how subscribers would play this. I won't give specific details. You guys can contact me directly. You can watch the previous videos to better understand where we've been and where we're going to go. And I'll probably update that when energy gets updated again and if it shows anything in particular. But I'm going to lay the groundwork so that this doesn't turn into a wild opinion-driven rally, which it probably is going to move that way. But the followers of the evolution of the trade and people who are looking on, wondering how that works and how it maintains our discipline, we need to understand how that's going to influence us far more than what's going to take place in terms of speculation. Speculation can get wildly out of control, and I suspect we might be headed down that path. The evolution of the trade is very specific. It follows the three time frames, the daily, the weekly, and the primary. It really focuses on the primary. The primary, we follow the price cycles and we follow time cycles. Everything is pretty much still below zero or at zero for time. Price is starting to move up. We've reached the mean now, so we know that wheat's mean primary move is 20%. We're above here in soybeans and corn because we're above zero. But none of these are extended. These cycles are normalized to a standardized distribution where zero is the mean cycle, and we move out from there in terms of standard deviation 1, 2, 3, 4, 5, 6, increasing extended very low probability cycles and extended readings to give us an idea of how far beyond the normal cycle the computer defines. We can see that the extension really lies within the weekly trend, but the time is still not extended. It's not bolded at all. The price cycle is what's bolded, and it's starting to push. Ultimately, the further this stretches, the more likely we are going to see at least an intermediate term correction. It's now filtering into the daily. The daily's corn is pretty extended and wheat is almost extended, even though the time cycles are still relatively young. Now, how far can these get extended? I've seen readings to 2 standard deviations is usually not enough in a really hot market. It can go as high as 5, 6, 8. Silver recently hit 8 before it backed off. I've seen 10 in volatile markets like Bitcoin. The commodity markets are pretty volatile, so it can go a lot higher than this. What doesn't have a lot of flexibility is time. Usually 2 to 3 standard deviations is the most you're ever going to see in the time cycles, and these are still very small, so this rally's probably got a lot further to go. Again, this won't go too much farther, and this will probably limit the rally, at least on an intermediate term scale. This can go to 2 to 3 as well, but since we're much closer to those numbers, it's possible the rally will start to lose fuel or run out of gas because you're essentially pushing on a string in terms of the weekly time frame, which is also important. It's not quite as important as the monthly, but it's far more important than the daily. And so we're going to watch those closely. If you're a grain trader and you're subscribing to the matrix, and watch the three time frames and watch the cycles and watch these cycle counts and how whether or not they start to show bolded red numbers. Their concerns, this is a concern right here, but these numbers are relatively benign still. So this could have more room to run. It's not going to be sky's the limit. Everything moves in and out. And we're going to talk about that now visually, how the trends move in and out. I've shown this with other markets, but there's cycles into everything. I've made an attempt here to draw in some of these cycles, and let me see if I can get this. They're roughly here. The computer is recognizing cycles by green boxes, and they don't line up perfectly, but because I'm eyeballing it, but it's essentially it's recognizing every time there's a green box or a cluster of green boxes and then these down boxes, and it's defining and it's learning and it's adapting to the daily cycle. So right now we're up in corn for the daily, we're up in wheat, and again, here's my eyeball attempt to create these cycles that the computer is trying to recognize and learn from. It's just a short snippet of them. the computer has a long database of which it learns from, and every new information it adapts to the cycles that are in play. This is actually the corn cycle we're worried about right there, or we're following is the magenta line. But this is for the weekly. Again, another weekly box, a up box on the daily. The size of these boxes is one of the reasons why, and I'll show in a second how you see cycle extension. But again, we have another box here. This is a relatively thin box relative to other boxes in time that get very long and high. So you have to be cautious. Corn could have a lot to run. But essentially what we're looking at is these up cycles that exist on the 3 time frames that are defined here. You can see them here on the daily. We have up, we have up, and we have up. And they're defined in terms of the size, both in price and price and time across the three time frames. And anything that gets into the red and bolded means that you have cycle extension. Doesn't mean immediate correction, because ultimately cycle extension and concentration is defined on a composite. Here's the composite scores for the cycles. They're not red yet. They used to all be negative and green, which now that's washing away because we're getting into the speculation phase. This will move up into the red. It'll actually get bolded red. When these numbers get too high, the chance of a correction they rise significantly. We're not there yet, which means there's further to go, most likely, before we have another attempt at a reset. Over in this column, we can see that the resets, corn had one too, but it's no longer probably reporting it because we're past a mean somewhere, and that's probably because we're right here. This is 15, it's past, it's blue, so it's no longer reporting. But the resets took place 15 days ago, and I think this one was 15 days ago as well. Wheat was 10 days ago. These were all points at which you could escalate it from the core position, and the core position is long because you see the BU is bull and BR is bear. The bullish primary trend has been up for 6 months and 8 months, and here's the return since the primary trends flipped. So these are starting to grow. The time cycles are moving together in sympathy with one another. They are oscillating according to their own cycles. It's almost as if corn and markets, wheat and other things follow their own cycles on a daily, weekly, and monthly. They're independent, but the reality is they're all connected to one another. And as we see, if we keep our focusing here on corn, corn is starting to accelerate, and it's accelerating because number one, it jumped the creek right about here, and now it just jumped the creek again. And those are attempts at breaking above significant resistance, or the supply and demand zones, which the computer calculates. They're calculated here in the reversal tab. When you pull down a market like corn, you can see them here. There's the daily, weekly, and monthly. And this is a visualization. This is the weekly. Weekly is the most stable. It generates probably the least amount of reversals, but just it's kind of the right blend between significant reversal zones and not too much information. And we can see that corn continues to take out the overhead resistance, and it's jumping the creek. It's now targeting this reversal zone up here and this reversal zone up here. How far the computer will draw more reversals as we probe higher. How far we're going to go is really dependent on this coil right here, this up, down. This is a geometric, or what they call golden rule coil. It's going to generate an upside forecast that's much bigger than the distance between here and here. If you superimpose those on and generate the geometric forecast, then that can be done not only in the matrix over in the columns here, which I don't have them, I took them out, but you can click these links when you get your download of your matrix. You can plug in this high level and this low level, and it'll give you 3 different targets. The primary target's probably in this range, or the first target's probably in this range. Second one's probably up in here, and the third is probably the old high. I don't know what they are. I don't have them. You'd have to plug them into the computer. What it boils down to is the distance between here and here is linear, and what people usually do is take this linear line, lay it on here, and say, well, here's the price target. But the fact is geometric price targets are generally much more observable in the real world, and they're much higher than the linear targets. So this puts a lot of upside pressure on corn. It does so on wheat and soybeans. Soybeans at one point was much further along, and in the prior videos it suggested that both corn and wheat would catch up, and they are starting to catch up. Corn's almost one in the same here, and it won't be long before wheat attacks that. You can go watch some of the old videos if you're a subscriber, and we talked about that in detail. I don't want to go over it again because it's just repeating the same old information. There's plenty of videos out there to watch. I would take the time to do it when you've got a chance. It'll help explain to you what's taking place. Going forward here, we have to recognize that all this stuff is mid-cycle. It's getting a little bit old. We definitely don't want to play when it's late cycle. It's no longer early. I'm not super interested in adding to it, but that doesn't mean, oh, it's time to sell. It's time to sell when these numbers get really gaudy. Big numbers here, big numbers here. We're not there yet. It's going to take some time, and it's probably going to come at the expense of much higher prices. And as I've talked about in the Matrix review and the commentary this morning, food inflation is starting to creep in. It's going to have a much bigger effect than industrial metals, precious metals, every other thing, even the price of lumber and housing. Those are difficult as well, but food inflation hits us to the core. People are struggling to pay their bills, and when they have to make choices like, do I pay my bills versus eating? Those are going to be difficult choices, and there's going to be consequences, and I doubt it's going to take place while everyone's sitting and watching TV. These are events that are going to push forward in the coming months, and we have to learn to recognize when the pressures are rising. If there's anything I can do to talk about it, we can have a discussion. We can have some discussion below the video. You can contact me directly, but ultimately food inflation is a serious matter that when you combine that with increasing taxation and other things, it really leads to the next layer of social unrest, which I think is going to be in the cards for the coming months and years here. So it's a discussion we're going to continue to have. But for now, let's focus on the evolution of the trade. For more about that, download the Matrix. Click on these links. Read about it. If you're not a subscriber, I'll put this link in the below the video, and you can click and read on that. Read as much as you can on the subject. It's really what we're doing is we're following the cycles in the 3 time frame, and ultimately we're bringing in energy. And energy is what's down here. It's the last thing before I close this out. You can see that energy moves in and out just like cycles as well. Uh, uh, this is the energy for the grain, all the grain markets, the composite grain DI, which is energy. The bullish build here catapulted the prices. The bearish build slowed things down temporarily. Then the energy build came off the bottom, which then supported another jump into the creek. And what we're going to see, and subscribers are going to see in the coming weeks, is this energy build is now going to dissipate lower and release itself lower until we get back down to here, which will then ultimately slow the rally. When we talked about those price targets up here, the energy build is going to come down here and it's going to slow the rally. It's going to represent profit points or profit taking if you want, or we'll have to analyze it in terms of the cycles when we get there. But the release of energy is coming, and this is what the expectation is. So I want you to study the 3 time frames, and we're going to watch closely in terms of how energy lays out in the coming weeks. We're going to get a new energy number today. It's through Tuesday. The following weeks are going to be quite important as well. We're going to see how much distribution is taking place into this rally. It'll give us an idea of when profit taking is going to come. So that's really the discussion for the grain markets. I think we are in a situation where everything is going to be taken to the next level. Some of it's going to be good and some of it's going to be bad. You can't have a pull on a string without any social consequences, and we're going to find out what those are as well. That's not my line of expertise. That's not the purpose of these discussions. I want to keep us focused on the markets for now, but ultimately it will likely spill over into that, and we're going to be talking about it when the time comes. So thanks for watching the video. If you have any questions about evolution of the trade or energy or anything we talked about, contact me directly. Leave some comments. Subscribe to the channel. More participation in these videos is needed and appreciated, and I would thoroughly suggest getting subscription to the Matrix. It'll help you understand really what drives trends. A lot of people throw out charts, and charts are just snapshots, where the reality is trends are fractal. They're in an infinite nature. We only study 3 of them, but there's more of them. The computers, you really don't need to go too much more. I go into actually quarterly charts or quarterly trends, but it gets to be an overload for the average person out there. But what you're going to find out is that the composite trend here is a combination of infinite number of trends, and we're going to learn to follow those. It's more than just tracking a daily chart and do I buy. You need to understand the cycles. You need to understand energy, and there's no other way to do it than to have the matrix, which is essentially a trading companion, investing companion, a producer companion. It gives you understanding in the markets that you participate in. So thanks for watching the video, and keep an eye on the grain market.